Freedom Seekers, Simon Dixon here, and today I'm going to talk about what I believe to be the most important balancing act and skill you will need to master in order to be a great investor and win this journey to financial freedom. Okay, so what is it? Well, firstly, it is a complete polar opposite, and I have found this commonality in most of the great investors. So I'm telling you this from personal experience, from having built a business, from having invested in over 100 different companies in the Bitcoin sector, from consistently having conviction in Bitcoin since the very first Bitcoin conference when I wrote the first published book in the world to include Bitcoin, and having achieved everything I could imagine financially from deep in debt. So let me tell you what it is, the skill, the polarity, the opposites that you need to master to be a great investor. I believe that being a great investor, from all my experience, is getting the balance right between certainty and conviction, uncertainty and testing. If you can get this balance right between a lot of certainty and a lot of uncertainty, I believe you will have what it takes to be a great investor. Now, let me give you some examples from my personal experiences. So when I was very first deep in debt, trying to build a bank, failed at that, and then decided to pivot my business into supporting Bitcoin companies from the early days, ended up investing in companies like Coinbase, Kraken, Bitstamp, Bitfinex, Robinhood, Blockchain.com, Circle, and many others that went on to become multi-billion-dollar unicorns. It was because of mastering and harnessing certainty and uncertainty. So let me tell you what I mean. So I was a banking reformer at the time. I believed that debt-based money was going to destroy the financial system. And that certainty led me to giving lots and lots of talks on the subject. And obviously I was proven wrong consistently until Lehman Brothers happened and we had the financial crisis. Now it was at that point when I, was really pretty deep into the Bitcoin, 2008, deep into monetary reform, and started discovering Bitcoin because of the certainty of trying to build an alternative to the traditional financial system. Okay, so the riskiest investment you can ever make, which lots of people make, which 90% of the time fails, is starting a business. But it is obviously the highest return type of investment you can make, because if your business succeeds in a big way, then the return on investment when a business can radically succeed far outstrips anything else. It's the highest return form of investment, starting a business from nothing, valued at zero, and then if you succeed all the way to, you don't have to go that far, but a multi-billion-dollar IPO or going public, then that is the highest return type of investment for the highest level of risk because the failure rate is so high. Now, when you start a business, do you need to have absolute certainty that you will succeed? Yes. But you also need to balance uncertainty, because otherwise you will never adjust to what the market wants and for what the world is showing you. And so you have to get this balance right where the vast majority is certainty, because if you can't convey certainty to your co-founders, to the team members, to your first customers, to the partners, to everything you need to make a business succeed, then you're not going to get past the first hurdle. However, you need to harness uncertainty where you're entering into the unknown and you have to adjust based upon what the world is showing you. Okay, so let me show you how that relates back to investing. So firstly, if you are in a business and you have mastered that skill of certainty and it's led you to the success that you have today, you have to also try on for size what happens if my business fails. Now, you could say that's negativity, you can't have that. Here's the skill. The skill is to get enough conviction in your certainty where you're comfortable enough trying on uncertainty for size. And what that means is that you take dedicated time to just be uncertain. And uncertainty you would do in case that happened. Now, you can use that in order to drive your certainty back to your original conviction. But you need to take dedicated time. So for example, if you own a business and it is succeeding and you've got all the certainty, all the belief you need, you've secured that funding by persuading people, by transferring your certainty onto them to want to believe in you and back you and invest in you, and then you use that certainty to produce a return on investment, you need to take some dedicated time to say, what happens to my finances if my business fails? And the answer inevitably is that you need to be taking a percentage of your income and investing in it, and investing in a complete alternative, because as your business grows, you want to ensure that if something crazy happens, then you need to be okay financially. And so it's healthy to try on uncertainty in building out that. Now that can apply to business strategy, it can apply to personal finances, and it also applies to your investing strategy. So the thing that made me successful as an investor is when I stopped, trying on everybody else's philosophy and came up with my own philosophy on how I'm going to invest. The worst type of investors are those that are looking, at jumping into Twitter Spaces or looking for the next tip or going into Telegram groups or trying to find people that are telling them what the next big stock is or what the next cryptocurrency is. These people stay there forever. They never progress in the game because they have no conviction to one strategy. And diversify with other convictions. So when investing started really working for me is when I developed a deep degree of certainty around particular investing strategies that I've covered on this channel many times. And then I challenge them by trying on uncertainty, which allows you to hedge those bets and then never go down the financial ladder. Because the key to investing is, yes, you have bear markets. Yes, you have times when your assets are performing very badly, but those are the best markets to increase your wealth if you're convicted to a path and strategy. So what do I mean by that? So let me apply that to investing. So with investing, I came up with 3 convictions that I've stuck to for multiple years that has served me incredibly well. The first conviction was a conviction that Bitcoin could become a store of value after it achieves speculative store of value. And the reason that I knew that is because I had deep conviction in what the problems were in the traditional financial system, which is when I saw Bitcoin very early, when it was about $3, I decided to reallocate my business to dedicating and focusing on that area, and had conviction all the way through in driving adoption and supporting the companies that were going to make this industry. And you could see the growth phase, you could see the trajectory, and I deeply understood with deep certainty the need to own your own money, spend your own money, and have a fixed supply digital hard sale money. So that conviction took me through over a decade of supporting the industry. But did I try on for size what happens if Bitcoin doesn't succeed? Absolutely. And what you find is that when you try that on for size, you hedge against what happens if Bitcoin doesn't succeed, but you also you can enhance your conviction after that. And so I will have dedicated sessions where I try on for size all the reasons why people believe that Bitcoin might fail. And so I try it on for size, I see if those convictions have merit or value, but I really enter the world of somebody that thinks Bitcoin will fail. And then I develop a strategy for what if my conviction and my certainty is wrong. Because here's the thing. You can have the majority of your time being convicted about something, but you're going to get disrupted at one stage in one eventuality for something you didn't foresee. So a great investor has to hedge a percentage of their portfolio for the things that they might be wrong about. And so you can have, you can have very, very large allocation to your conviction, but a percentage allocated to what if you're wrong. So that led me to, well, what if the US government can continue their debt-based Ponzi scheme? That led me to really, really early, probably the first I know about, because I talked about it in 2011. I didn't give it the name central bank digital currencies, but I talked about what a world would look like when governments take over the money supply from banks, and could they continue a debt-based Ponzi scheme by taking over the money supply? And my answer was absolutely yes. They've done it before in prior wars, where governments and central banks have just simply taken over the money supply from the private banking sector. And it happens approximately every 100 years in a monetary renegotiation. So in 2016, I started talking about the concept of central bank digital currencies. When the very first time it was talked about, I realized, oh, that's what I was talking about in my book, Bank to the Future, Protect Your Future Before Governments Go Bust. So when China announced that they were working on a central bank digital currency, go back to the YouTube video way back in 2016, I was on CNBC saying that this can happen, this will happen, it's inevitable, predictable, and guaranteed, because I tried on for size. Is it possible that they can rehypothecate a debt-based Ponzi scheme and deleverage it through transitioning and taking away everyone's freedoms and moving the money supply completely over to the central bank or the government? So that's how I stayed upon that. So then what I do is I created a part of my portfolio that says, well, what does that world look like? Well, that world looks like the US dollar being the dominant empire for the rest of my life. So I need a strategy around trying on for size that the US empire is the dominant empire for the rest of your life. What does that require? Well, it requires the US dollar to be the world reserve currency for the rest of my life. And so I have a section of the portfolio dedicated to that. I then test on for size another conviction, which is testing the US dollar portfolio. Is it possible in my lifetime that we will have a change of empire and it doesn't transition to everyone going for this, this politically neutral currency? Is it possible that we have another world reserve currency? And what has happened in the past? Well, in times of war, in times of empire changes, gold has been the only currency that people will settle in. So while I believe that it will be Bitcoin, that's the majority of my conviction, what happens if the US dollar implodes in my lifetime? And that's when I came up with a gold strategy. And a gold strategy is, here's a proven store of value that has stood the test of time for 5,000 years. I should be accumulating a percentage of my wealth every month into my conviction, into my US dollar strategy, and into my change of empire strategy. And so I set about conviction in what would happen, what would an investment portfolio look like in each of those scenarios. And then I broke it down into, what would happen if that doesn't work? So do I have a percentage of my Bitcoin into the wider crypto market? Well, I believe that Bitcoin is the only shot we have at digital hard sound money, but is it possible that these central bank digital currencies could build on a public blockchain? Well, no, my conviction said they'll create a private blockchain. But is there a chance that a country decides to go for a public blockchain, do something different? We have a radically different. So then you start looking at, well, I believe in proof of work. I believe that that's what makes decentralization. And I believe that proof of stake takes you to more centralization and more control in those scenarios. But what if I'm wrong? And so you hedge a percentage to being wrong. Now, does that mean that you're unloyal to Bitcoin? You're not convicted in a Bitcoin maximalist philosophy? Well, I believe that I've been, oh, let me get my mic down, that's falling down. Sorry if that made a feedback. I believe that I've been convicted as a Bitcoin maximalist that Bitcoin is our best and only shot at digital hard sound money, but that didn't stop me investing in lots of Bitcoin exchanges that then became crypto exchanges, and then they did all the diversification into everything else that's created in this market. And then do I have a percentage that's trying to understand how DeFi works and trying it on for size from the Ethereum maxis world? Now, I don't go too far down that curve where you go insane, where you suddenly find yourself a bloody Polkadot maxi or something like that. But I reach a certain point where I think about what are the high probability cases. Now, if you want to be a rampant wild gambler and speculator, then you do what you do in business, right? You invest into the things that are just crazy, unlikely, and you go further and further and you invest into the further down, and that's what most people do. They blow up their money, they become traders because, you know, the top of the cryptocurrency market looks different every single year. And so you become a degenerate gambler. Now, am I saying you don't do that? Maybe you want to do that with a percentage, but that is not how you become a great investor. A great investor needs to be thinking about what will happen in your lifetime. What does it look like when you retire? And that also drives you into thinking rather than just capital growth, which is where Bitcoin savings, but you also have to start thinking about income strategies, because eventually you need your income to replace your work, because that is the key to retirement planning across your lifetime industry. So then you start thinking about intergenerational wealth. How do you pass that on? Now you've got to break it right down into something really simple. So in my videos, I've always tried to help people understand the starting point if you want to get into the sector and the industry, is just to have more Bitcoin each month than you did in the previous month. That's the starting point for me. Then you improve with, you buy into the conviction of why that might be true, which is this YouTube channel. Subscribe to this channel, and we'll keep going on that conviction. The reason I'm in a gym right now is because I create these videos just as the reward for you holding me accountable to check in each day to the gym, which is a reward, so I give content accordingly. And so if you've enjoyed this video, make sure you subscribe, hit the bell symbol, hit all. YouTube will notify you each time I go live. But you take that certainty and then a percentage of your time, you convict yourself around uncertainty. So you take your dedicated time to listen to someone that totally is a great investor, but doesn't believe in Bitcoin. Why is that? That doesn't mean that you use it to change your conviction. You got to have a greater macro philosophy to be an investor. This is different to trading. This isn't you looking for a short-term trend and thinking in terms of dollars and saying, how could I use this investment in order to get more dollars? My base currency, my conviction, is accumulation of Bitcoin with lots of hedges so that whatever happens in the world, I don't climb down the financial ladder, I only ever climb up. In bear markets, obviously my dollar value of what my portfolio may be worth, in the cases of Bitcoin and stuff, might be going down, but that's a good thing, because if you're accumulating every single month into a convicted strategy, then the lower the price goes, the more you can accumulate. So one of the big challenges I'll be covering this week on Friday in my weekly session on whether this is the end of the bear market in Bitcoin. So I'll be covering that on Friday, look out for that. But I hope this is useful. of conviction and certainty over a consistent time frame is what makes a great investor, as long as those convictions are barking up the right tree, obviously, and then trying on uncertainty in order to enhance your convictions, but also hedge against some of those convictions being wrong. So always remember, you are alive at one of the most interesting and exciting times in financial history. I want to make sure some people are going to get really hurt in these markets, others are going to do really well. And subscribe to this channel, like this video, hit the bell symbol, hit all, and I want to make sure you're on the right side of that change. As always, we do this with peace, love, and unity, and I will see you in the next video tomorrow. Peace, and let me know in the comments section what you'd like me to cover in future videos and what you thought about this, and also share with me what your conviction is, what your certainty is, and how you are going to try on some uncertainty and not let that affect you. Peace.